What's going on, everybody? So I want to do another training here. I did get another question in the Discord. This question was, I find that a lot of newer traders, so I'm going to say if you've been trading and you just started trading within the past 12 months, even the past 18 months, if you've never traded actively before then, you've kind of been a little bit spoiled. Okay. So obviously we know going back, coronavirus pandemic, March 2020 happened. Market didn't crash, but the market had a massive drawdown. And then it was like right after everything kind of, with the pandemic kind of just came to light, the market really just was on an epic ride pretty much all the way up until about January, February of 2021. So if you did just come into the market during that time, you were a bit spoiled because a lot of newer traders or new investors or Robinhood traders or this big frenzy of people, A, who have lost their jobs, people, B, maybe who now were forced to work from home. So they had a lot more time on their hands. A lot of people received stimulus money, unemployment money. So there was a lot of money to go around, and a lot of people gravitated towards quote unquote, this glorified career that we call day trading. Okay. So if you've kind of been around day trading and you've been around stock trading for longer than 2 years, you kind of know that what we experienced in 2020 is not the norm. Normally we have bull markets, which we've been in for the past 4 to 5 years. Realistically, we really haven't seen anything catastrophic in the market. Really realistically going back to 2007, 2008, when we had the real estate crash. Unfortunately for me at that time, I wasn't involved in the market. So I myself even got into a bull market after that. But I've also seen bits and pieces and time frames where the market wasn't always so hot. The market may have been a little bit choppy, or we could have, had a little bit of a drawdown and a pullback to where we were more bearish and more short-sighted focused rather than long biased. So the problem that happened was that a lot of people got into trading because of GameStop, because of AMC, because of, a lot of these other speculation stocks and these short squeezes and these catastrophic moves that, those particular stocks seen. And you got very lucky. Myself, I was involved in GameStop 2 to 3 times. I was involved in AMC probably closer to a dozen times in and out of the market. However, I also did understand price action. I did understand moving averages. I did have a personal strategy, that has worked for me, that I learned from someone who, was a hedge fund trader, worked on Wall Street, worked at multiple prop firms in, East Coast, and gave me a very good insight as to how institutional money flow works and how institutional traders are looking at the same charts that we all have access to. So with that being said, the problem that this member had in the Discord is that they were watching a lot of YouTube videos on certain YouTubers. Obviously, I would never out anyone specifically or talk about any specific YouTuber who, promotes certain stocks that are A, going to short squeeze, B, going to the moon, or the next stock to fly, none of that stuff. So my whole answer to this kind of just general statement, as in, left holding the bag on a lot of these stocks that YouTubers are talking about, is you have to take your mind and your eyes and your ears away from social media. If you need YouTube, or you need StockTwits, or you need Reddit, or you need Twitter, any one of these social media outlets to find the next hot stock, my only question to you is, how long is that going to sustain itself? How long are you going to continuously stay in business and keep the lights on? And what I mean by that is, if you're always constantly relying on a YouTuber to give you the next hot play, or somebody on Twitter, social media in general. So I'm just going to use that for the sake of the video. If you're going to rely on social media to get your next play, I'm going to tell you that 9 times out of 10, you probably won't be in business longer than 3 years actively. And the only reason that I say that, that's not to take anything away from anyone's due diligence on a particular stock or company or fundamentals or the short interest or any of that. Because as we've seen with GameStop, as we've seen with AMC, a lot of people came into the market and made life-changing money with those particular trades, myself included. I made, quite a bit of money on that first initial GameStop push higher. However, I wasn't looking at one particular person or watching one set of videos or listening to one particular, investor or trader or someone who did due diligence, just based on the fact that, I was more so looking at technical levels. Yes, there was a lot of momentum. There was a lot of FOMO behind these plays. There was a lot of speculation behind these plays. There was a whole thesis and, active due diligence behind these plays and the reasons why they spiked. I understand that, but I also understand that there is technical levels that are involved in these particular plays. Lucid CCIV was another one that I was also involved in a handful of times. However, with these plays, I think a lot of people were spoiled because of the fact that, yes, maybe they did enter these plays, they were able to make some money, and now they got extremely comfortable thinking that that was the norm. So the point that I'm trying to make is that, yes, people were able to make money off of these plays. However, there's handfuls and dozens and hundreds and thousands of people who also got left holding the bag because of the fact that they did not know when these things started to make these explosive moves higher that they should have been selling into that explosive momentum higher. They really had no idea where supply and demand was at. They really had no idea where moving averages are at. They really had no idea on how to read candlesticks. They really had no idea as a realistic price target, because at the end of the day, a lot of these people that were promoting these stocks and these plays had no realistic expectation. So I'm just going to be very, very honest and clear. For example, when the whole GameStop saga and all of that, mess was going on, I heard people saying that the stock was going to go to 1,000. I heard people saying that 10,000. I heard people saying 20,000. That if we just hold our shares, it's going to go to 100,000. Guys, we have to take a look at this. We're not playing the lottery, okay? We're not playing the lottery. Now, that's not to say, I myself have talked to people in other traders. I myself have talked to someone that put $100,000, $50,000 into these specific plays, walked away with 400,000, 750,000. I even have spoken to people who have invested, $150,000 into these plays, $200,000 into these plays, walked out with $1 million, $2 million. Now, the problem with that is that when those people who were lucky, okay, because nobody actually knew how high these stocks were going in the first place, when they actually invested their money and they trusted the due diligence, maybe their due diligence or someone else's due diligence, or they trusted the news on what they heard, or they trusted this social media outlet, they made money. The problem is when they turn around and then you start posting these gains and you start talking about the gains and you start talking about, how much money you made or where the stock price is going to go, you now start to influence other people who have no idea what they're doing, but would like to be a part of that whole journey, get into the stock when it's already too late. So for example, on my chart, what I have here pulled up is Lucid. Obviously, we know that the whole merger happened. After the merger, things kind of fell south. We've been trading sideways for months and months and months now. A lot of people are still stuck in this current play. A lot of people have sold out of this play to kind of free up money for other trades and taken a loss on this. And some people, have a 5 to 10 year outlook on the stock that it could be the next Tesla, this, that, and the other. Not to take anything away from Lucid. Maybe it can in 1 year, 3 years, 5 years, 10 years down the road. But what I'm talking about is from an actual day trader's mindset and a day trading perspective, we have to really take into account the chart patterns. We have to take into account the technical levels. We have to take into account the candlesticks and what it is showing us. So if we just look at the very beginning of this, back when, CCIV at the time was $13.97, initially it broke out and ran to a high of $20, kind of sat there for a while, a little over a month, had this next big breakup here into the 35s. And then realistically, this 1, 2, 3 days, 4 days worth of momentum here, this was your big push higher. This was into the merger. This was when the merger was confirmed. This, that, and the other, ran up to a high price of 64 and then began to sell off. But there was telltale signs that this stock was getting ready to reverse. One thing is that we were extremely disconnected from the moving averages. Okay, even though it was a new stock, even though this was a speculation play at the time, based on the merger, based on them releasing cars in 2021, based on a lot of different factors. However, when we do start to get super extended, and it has made this, sort of explosive move like this, ranging over 1 to 2 months worth of time, you have to expect some sort of pullback. Now, is this type of pullback all the way back down here to lows of $17, a healthy pullback? This is not healthy. This is a lot of institutional money pumping up the stock, as well as retail traders jumping on this train as well. You should have been selling into these big, large spikes. And if you know anything about candlesticks, these big, long wicks down are never good. This is bulls trying to push the price higher and bears taking profits and squeezing the price down lower. So all of these little wicks here, even though the price did not close at these top wicks here, there is traders and there's people that are holding the bag and stuck in these individual plays. And if you had no price target, if you didn't know where to take profits, you didn't know how high the stock can go, you kind of just got stuck in this area holding these stocks. Or even down here, after we pulled all the way down here, you get one spike up and you think that we're going to immediately revert back to all-time highs after this merger and everything, with the company sort of settles. You get these little run-ups here. You think that, stock price is going back higher, so you buy in, gets drugged down. But the problem here is that every time we broke above the moving averages, quickly bears would sell this off, and now we are below supply. So anytime you are underneath the 50-day moving average, the 20-day moving average, the 5-day moving average, this is going to act as a form of resistance until we can break through and then bottom out and sort of create a new base above the moving averages to give those moving averages time to sort of catch up with the momentum and catch up with the stock price, is when you want to actually look for that next leg higher or that reversal off the bounce. So in short, and I'm going to make more videos talking about this, fuck what social media is telling you. Okay, fuck what someone on YouTube is telling you. They're saying that they've got, X amount of shares that they're holding for this specific price. That's completely irrelevant. There's two sides to every story, and there's one side of there is people with a lot of money that can move these low float stocks. Now, I'm not talking about Lucid or AMC or GME, but there's also low dollar stocks with low floats where $100,000 buy-in can sort of raise that price up. And as that price is raising, you get a lot of other day traders and short-term swing traders who now ride that momentum higher. And then you have another train coming behind those people, which is your average common retailer who is hearing about that explosive move maybe 1 day, 2 days, a week after the move has already started. And, it's still, that's why you get that age old saying and that mantra, the common day pump and dump. There's huge Discord communities out there, huge YouTubers with a huge following that can move these low float stocks with, some serious momentum as they start to get these people involved. But the problem is that normally the person or the channel or the Discord community that's talking, or the subreddit that's talking about these stocks, normally they're in at the ground floor. So by the time you're hearing about it, you're already a little bit too late. Now, that's not to take anything away that if you did come in a little bit late, that you still wouldn't be able to make some money. However, you have to know where you're going to take those profits, because if and when in doubt that this stock does dump, or the squeeze is over, or the momentum has slowly dried up, that you're not left up here holding the bag on the stock. That in fact, that if the run-ups on Lucid started here at 13 and you didn't hear about it till it was in the 30s, okay, we've already ran up over 15 points on this stock. Now, okay, if you were to get in here, okay, if you were to get in here, you already have missed half of this move, okay? Half of this move. Now, that's not to say that you still couldn't have made money, but realistically, what is your price target? If you are not a long-term investor, meaning that you are not going to leave your money in this stock for good or for worse, and you're going to continue to add on the significant dips, and you're going to continue to hold this stock 5 to 10 years, and that's your plan, then none of this stuff matters. But if your sole intention was to get into this play and make a short-term trade, whether that be a day trade, a 1-week swing trade, a 1-month hold on this, and then sell out and take your profits and move on to another play, you have to have had a price target on specific run-ups. So even at this price here in the 30s, when we did get this explosive move higher, we went from a price of $36 to a price of $52. So if you entered that price here, 2 days later, you would have made 20 points on your money. If you would have taken 1,000 shares and made 20 points on your money, you would have walked away with $20,000. If you were playing on the option side of things and you bought 50 contracts, 100 contracts, you would have walked away with a significant amount of money on this trade. But if you entered into this trade and you made the 20 points, and now you're sitting back telling yourself, well, I think it's going higher because everyone's talking about it. Yeah, but how much higher? Okay, how long are you going to hold this stock? If you have no clear direction of what you are doing with this stock, you should not be trading these types of stocks. You should not be listening to Joe Blow, some bozo ass chump on the internet telling you that this is the next stock to go. Now, that's not to take anything away from anybody who is currently holding Lucid. I think that the company will continue to grow over time. We would have to see what their release numbers are. Obviously, they're, the fundamentals of the company as far as earnings and deliveries and so forth. There's a lot of work that Lucid has to do. But on the short-term side of things, once we got this huge run-up, we have to know if this is a short-term trade, we need to be taking profits. We put money in to take money out. We don't put money in and say, maybe this is going up. Maybe it's going to be 1,000. Maybe it's going to be 500 a share. What are we basing that off of? Because you read that on Reddit? Because you read someone's tweet? Because someone on YouTube is telling you that they believe in the stock and that it's going to 100, it's going to the moon? Who the fuck are they? So you have to really understand, are you an investor? Someone who looks for these smaller stocks, and I'm just using Lucid as an example, but not necessarily Lucid. But are you someone who's looking for these low float, stocks that are able to pump? You want to get in on the ground floor. You want to hold them till they pump. If that's your game, go ahead. But what I'm going to tell you is they're unpredictable. If you want to do this for a living, if you want to do this for the next 10 years, the next 20 years, the next 35 years, you can't simply chase what everyone else is trading, because by the time you come along as a trader, I will tell you for a fact you are 1, 2, 3 days late on this play. And by the time that the run up happens, it will run so fast that you have no idea where to get out, and you will be left holding the bag. Any of you guys who have had successful trades on these specific plays, and the plays that I'm talking about, a lot of people are talking about them online. Everyone on Reddit is talking about them. You see multiple YouTubers making videos about this one particular stock. Those type of plays, if you are entering those specific plays and you actually are able to catch money, because you can, if you know technical levels, you can catch these plays and make some good money. There is day traders and scalpers who simply look for Momo. They look for momentum. They look for, what is everyone talking about? They're running scanners on every Facebook group, Twitter, StockTwits, Reddit group, and looking for what has the most momentum behind it. And they're looking to day trade. They're looking to buy 1,000 shares, see it run up 50 cents, see it run up $1, get in, get out. Repeat that process, rinse, wash, and repeat over and over and over. But if you are someone who comes along with $1,000 and you come along here and you buy 300 shares or you buy 100 shares of this particular stock, and you have no end game, you don't know anything about the company, you're learning about the company, you're learning about the fundamentals, you're listening to what everyone else is talking about the stock, you're listening to this price target and what this stock can do and this squeeze and that squeeze, and the stock actually starts to move up and you have no knowledge of where you're going to, if you're actually going to scalp this, you're going to day trade this, you're going to swing trade this, you're going to hold this for the next 5 years. If you don't have a clear plan before you purchase and enter into the trade, you are going to get eaten up more times than you are going to make money. Okay. So I just want you to take that into advance. You want to be a person who can dissect the chart from a technical level and be able to put your money in before everyone else or with everyone else, and also take profits. As the price is increasing, you want to start selling your shares to those people who are coming in, if that makes sense. If these are your types of plays. You never want to be buying the candle up here, okay? Even though from the price of 56 to 64, you would have been able to make money, but the average retail trader is going to see all of this momentum and hear all of this hype. They're going to buy in here, watch their P&L grow, and by the time they're ready to sell, this price is going to start backtracking on you. And now, but next thing you know, you are stuck holding the bag. My personal opinion on these types of plays is not to say that you can't play them. I know a ton of people. I made money on the Fubu run up. I made money on the Skills run up when it went up to $45. I made money on the GameStop run up. I made money on the AMC run up. Lucid I was in a handful of times. SPRT I was in twice. SoFi I've been in multiple times. There's been numerous stocks that I've been into. And besides the exception of Fubu, where I tried to overtrade it, meaning that I was in and out of that stock 3 to 4 times. And on that 4th time, I myself knew that, momentum was drying and I tried to catch one more wave and it caught me. And you will get caught. The problem is that an inexperienced trader, when they get caught, they lose their account. When they get caught, their account draws down 50%. When they get caught, now they start chasing other plays like that to try to recoup their losses. And it becomes this never-ending cycle of trying to continue to chase these type of plays. If you can't sit down at your computer screen or whatever you trade on and trade Apple on a weekly basis, consistently for 20 cents, for 50 cents, for $1 here and there. If you can't figure out technical levels on a stock like Facebook and trade Facebook on a consistent basis, then you will never really have longevity trading these types of plays. And I know that's going to suck for a lot of you guys to hear, because a lot of you guys have made money on these plays. And that's not to take anything away from any of you guys who have made money on these plays. The whole point I'm trying to say is that if you came in to a very extremely hot market and you were able to capitalize on this, and let's say you took a $5,000 or a $10,000 account to $80,000 to $90,000, you want to know what the difference is between you and someone else that has maybe $1,000 or $2,000 trading account is that you have money and capital to fall back on because you got lucky and or were in at the right time and sold at the right time. And now you can afford to maybe throw 5,000 here, 10,000 there, while this next person who may be trading $1,000 or $2,000 account cannot afford to play the riskier plays. They cannot afford to maybe have their money tied up for 1 month, 2 months, seeing drawdowns and waiting and hoping, because it turns into this cycle where you start looking for this next YouTuber or this next person on social media to kind of tell you what the stock is going to do. And to be quite honest with you, nobody knows what the stock market is going to do, whether it's going to go up or whether it's going to go down. All we know is technical levels. And when price action confirms technical levels, it goes higher, that whether that be to the upside or to the downside. And all we know and all we are doing as a trader, as a day trader, as a scalper, as a swing trader, is waiting for price action to confirm technical levels, and we are taking advantage of those technical levels. We are not just saying Lucid is going to $500. We're going to buy at any freaking price that the stock is because, thousands of people are talking about it. That's preposterous. That's insane. It's absolutely insane. So my best advice is to learn how to trade Apple. Learn how to trade Facebook. Learn how to trade AMD, Microsoft. Learn how to trade these stocks that are controllable, that are heavily traded by institutions. Okay. Everyone likes to talk about the suits. Everyone likes to talk about hedge funds. You want to know what hedge funds and institutions and the suits trade on a daily basis? They're not trading Lucid every single day. Yes, you have your dark pool sales. Yes, you do have your institutional investors loading up on these for their clients, but they're not actively day trading these stocks. This is not making up their portfolio. It's such a small amount of their portfolio, even if they are trading these stocks. They're trading the triple Qs. They're trading the SPY. They're trading NVIDIA. Okay. They're trading the Teslas of the world. They're trading the Amazons of the world on a day in and day out basis, on a minute by minute basis. If you cannot take a simple stock like Apple and learn its technical levels to the upside as well as to the downside, unless you can trade Apple 3-4 times a week, I would highly recommend to stay away from these type of plays, because it's not until you understand price action, it's not until you understand supply and demand where you can take advantage of these type of plays. So when you see, hey, we did have a run up here, now we are consolidating a bit. If we break this double top high here and we get this pop, I'm going to put my money in here and possibly take 1-2 pushes higher. Okay. Understand here that this is a massive green candle here, elephant bar candle. This is a very risky play up here where I'm moving my cursor. This is extremely risky play. But if you can't tell yourself, I'm going to scalp this play because of the momentum and enter in at 54.97, let's call it 55 for the sake of the video. I'm going to enter in at 55. In this next push higher, I'm going to sell at high a day of 59. That's all I'm looking for, 3 to 4 points. Not saying that we are on a serious momentum here and I just need to buy at 55 because this is going to 1,000. You really stop and think about that for a second. Does that really make sense? I hope this video made sense, guys. Not to bash on anybody who trades these type of stocks. I've traded these type of stocks multiple times. I just want you guys to be safe. I don't want you to take all of your advice from someone on YouTube. I make plenty of YouTube videos, but I'm never telling you buy this stock or this stock is going to do that. That stock is going to do that. What I'm doing is breaking down technical levels that everyone can see. And what I'm saying is to stay patient. And when these levels confirm, we want to put our money into these. And if they fail, we want to sell. We want to sell when they fail. We want to keep our losses very, very small, and we want to let our runners run. I hope that kind of helps.